Powell testifying before the Senate Banking Committee. While he acknowledged the risk of holding rates higher for too long, he said we also need to see more good inflation data before cutting them. Take a listen.
It doesn't seem likely that the next policy move would be a rate increase. We don't take things like that off the table, but that does not seem the likely direction. The likely direction does seem to be in, as we make more progress in inflation and as the labor market remains strong, we begin to loosen policy at the right moment.
Let's get some reaction from Dryden Pence. He's here. He's CIO of Pence Capital Management alongside Stephen Stanley, chief U.S. economist at Santander. Welcome to both of you. Dryden, quick knee-jerk market reaction. I guess markets took this as slightly hawkish, given that he still tried to say maybe we need to see, some more consistent progress.
Well, I think at this particular point, it's always continues to be that wait and see, and it's a question: is it one cut, or is it two? Is it September? Is it December? But in general, they're still trying to be very data dependent, and I think that you're trying to not to give the idea that they're going to be political about it or anything other than completely objective. And I think that that's kind of the market's taking that in stride and continue to do. We have a robust economy, and I think that that's one of the key things that we're just slowing down from 90 to 50.
Well, let's ask the economist to your left. Is it robust, Stephen? Because we were debating last hour whether things have now slowed. Not you have to debate the recession question, but simply the question of cutting rates from 5.5% to something maybe more neutral or appropriate.
Exactly. No, the economy is definitely cooling off, but it's cooling off from a very hot setting for a couple of years now. And I thought it was interesting in the hearing, the politicians wanted to emphasize how much it's cooled off and not talk about the level. And Powell kept coming back to the fact that, we're slowing down, but the economy's still solid.
And why do you think he did so? Because it's funny because you'd think, okay, well, it'd be the opposite. I would expect the Fed chair to be talking about, well, things are cooling, and everyone else is saying, no, but inflation's still high. And it sounds like that wasn't quite the tone of it.
Well, I think, as you would imagine, most of the politicians are probably hoping for a little rate cut before the election. And I think Powell didn't want to have to commit to anything. So if inflation data cooperate, they'll be easing soon enough, but we're not there yet.
Dryden, we're going to start seeing some earnings later this week from some of the big banks. What are you expecting for earnings season as we get into it, and then earnings for the rest of the year, if in fact the economy is slowing a little bit?
Well, like we said, we're going from a torrid pace to a sustainable pace. And I think what we're going to see, and we're going to know here within the next 30 days, is that a broadening out, the earnings recession is now turning into, from a rolling recession into a rolling recovery. And you're going to see the broadening out of many companies are beginning to see pickup in earnings. We've had this narrow growth. We're going to see that broaden out. We're going to see more companies. I think the vast majority of companies are going to beat. And they're going to beat expectations, and they're going to probably be beat handily because you're beginning to see this final phase of the rest of the S&P 500 finally catch up to some of the earnings growth that the Magnificent Seven had.
Are you at all concerned about the valuation? I note in some of my research materials that when you look at the equal-weighted S&P 500, I'll ask you first, and then maybe you can chime in, Stephen. The equal-weighted S&P, or you take out the seven, the Magnificent Seven, the earnings multiples are pretty normal.
Exactly. So when you say we're at a higher, if you say the market has gone up too far, it's only with a few companies. So when you look at the rest of it, they're about an 18.4 if you pull out the Mag 7, right? So we're into a normal valuation, a normal PE area, and if earnings are growing, that's going to be supportive of those stocks. I mean, one of two things happens here, I think. Either the foundation of the market gets better and stronger and broader, or it propels the market forward into the rest of the year. And so I think that we're kind of on the side of we think the market's going to be reasonably robust continuing for the rest of the year. It's just leadership is going to change, and you're going to see that rotation in leadership to a broader group.
Stephen, I just read an interesting stat from Bespoke that said both the ISM manufacturing and services are under 50, as we know, but that usually that only coincides with recession. And the weird thing they said about that is usually by the time this happens, the market's already sold off. But this time we're at record highs. It's very odd.
Well, again, I mean, this gets back to the change versus level picture because the ISM measures change. Right, so the economy can be cooling and not necessarily be weak. I think the manufacturing sector has been contracting a little bit, but the services sector, I think maybe it's normalizing, but I don't think that what we're seeing in that part of the economy is weakness at all.
So it doesn't worry you. And why don't you comment on Dryden's comments on earnings? How do you expect them to come in?
Well, I mean, I think if the economy slows, it can still be a good period for companies. Companies have had better pricing power, maybe to Chairman Powell's chagrin.
Yeah.
And as long as that continues, obviously it weighs in positive direction for profitability. A recession is one thing, a slower economy is something very different.
But that's where I find the Helen of Troy example very interesting today, and not to go too granular on it, but this is a consumer products company that raised prices a lot in recent years, has maybe gone too far, now has to pull back. And if that happens, this is what Piper Sandler and Nancy Lazar have been warning about could happen, that we could see corporate revenues stalling out, margin pressures, earnings declines. From that point of view, this doesn't look quite so much of a healthy development as maybe the start of a worrisome one.
Well, it's certainly, you're talking about a weaker economy, right? So there are always dangers in that. It also means an economy that is more vulnerable to a shock, right? Recessions don't just happen out of thin air. They're usually caused by some sort of external shock. When we're growing at 4%, we withstand those types of shocks as we have over the last few years. You get a slower economy, you're more vulnerable. So it doesn't necessarily mean recession, but it could happen.
And similarly, Dryden, I don't know if you had any thoughts about what we're seeing in kind of whether it's Helen or some of the CPG companies that are having to rethink price now.
Well, I think the idea of that people going out and buying any product at any price is over. For a while, they did that. And so now you have a consumer that's more conscientious, that's more thoughtful. They're picking what they're going to spend their money on. And you're seeing some changes in consumer behavior, right? So you've seen companies in the fast food industry not do as well or not be able to sustain their price increase because you expect fast food to be fast and cheap. And when it's neither, you're going to move to something else. And so consumers are beginning to change their pattern as they think more about this inflationary environment, and they're becoming pickier. That doesn't mean they're not spending money. More people are making more money than ever before, and Americans spend it. So the aggregate demand stays very high, but it's going to move from sector to sector. People are moving towards experiences. People are moving towards other particular things that they're trying to spend their money on, and we're being more thoughtful about it.
Dryden, it takes a cool cat to wear a full three-piece suit on a 97-degree day. God bless you, man. And a double-breasted. Looking good.
All right, thank you, sir. Appreciate
Stephen,
it.
thank you as well. Appreciate it.